Hey, how's it going, everyone? My name is Amos, and in today's video, we're going to look at what would 100 shares of VTI look like, especially the dividend payments over 20 years. VTI is essentially an index fund of all of the companies publicly traded on the US stock market. But before we jump into the video, did you know that we are in the middle of earnings season for some of the biggest dividend companies, and things are not looking too hot? Surprisingly, one of the more popular dividend companies that actually did okay is Coca-Cola, but everyone else is struggling. And that's because we're starting to see the consequences and ramifications of inflation and consumers pulling back their spending dollars. And I was reading the Wall Street Journal this morning and I ran across this article that said Cheetos are the latest economic red flag. Pepsi said that sales volume fell by 4% year over year. And so my question to you is, how are you guys doing? Are you doing okay? Are you feeling the pressure and the heat from inflation? Because I'll tell you what, once I started seeing some of the prices of grocery items just going up and up, I decided to boycott. Yes, one person boycotting, I am positive that Pepsi is not going to feel the effects. However, I was the kind of guy that every single time I went to the grocery store, I would grab a bag or two of chips. Same with a tub of Greek yogurt. Those are two items that I no longer get anymore because the price is just too outrageous for me. And then on the other side of the spectrum, you're going to have people that are very bullish on the biotech and pharmaceutical industry saying, hey, it's Ozempic. That's the reason why people are not buying these chips that are now $9 a bag, whereas 4 years ago, it used to be $2.99. No, buddy, it's not Ozempic. It's the result of inflation. But I'll tell you what, it might be a good opportunity for fat people like me to lose some weight. If we all decide to boycott here and there with these big ticket items from the grocery store, we could all lose some weight and be a little healthier. Just thinking positive here. All right, but anyways, let's go ahead and look at the profile for VTI. So currently they are trading for $273 a share. Their current dividend yield is just above 1%. The annual dividend for each share that you own is going to be $3.18 a share. Back in 2014, every quarter, meaning every 3 months, you got a 42-cent dividend. As you fast forward throughout the years, it did go up slightly, and now you get 95 cents every 3 months. And when you look at VTI's stock performance for the past 5 years, it has been a 14% CAGR, meaning that the stock has grown by 14% year over year. And when you look at it from a 10-year horizon, then it's 12%, and 15 years, 14%. And finally, when we look at the performance for 20 years, 10% year over year. Pretty good returns, pretty consistent. And since the inception of the index fund, VTI's dividend growth rate has been all over the place, as you can see right here on the right side of your screen. And that's because VTI is not just one publicly traded company. Rather, it's the entire US stock market. And it's contingent upon how those companies are doing. If they're doing great and they raise their dividends, then it's reflected in VTI. But if companies are struggling and they're slashing or freezing dividends, then that's also reflected in VTI. However, after doing the math and quick calculations, the average dividend growth rate for VTI year over year has been 9.7%. And the next thing that I like to do is compare a potential investment to the market. And in this case, what you see on the right side of your screen is the S&P 500, aka VU. And on the left side is going to be VTI. I compare it to see if it is a better investment than the market. If not, then it's better to just invest into the market. However, looking at this timeline of January 2015 all the way to June of 2024, with $10,000 invested initially in the beginning period and reinvesting the dividends back into the investment, the $10,000 invested into VTI would have turned into just shy of $30,000. On the other hand, if you would have just put the $10,000 into VU, then it would have grown to $31,500. So VU did outperform VTI just by a little bit. But to be honest, I would say the performance differences are pretty negligible. For the exact same time period, the CAGR for VTI was 12.1%, and for VU, it was 12.8%. And again, I want to do this with SCHD, which is one of the more popular dividend ETFs that everyone on the internet seems to like. The exact same parameters and variables, $10,000 invested into SCHD would have turned into $26,000. VTI, of course, $29,000. When we look at the CAGR for SCHD, it's 10.8%. meaning year over year, your money would have grown by just shy of 11%. So in this case, VTI did perform better than SCHD, but I still have to give kudos and props to SCHD. Do you remember Zynga? That was how you used to comment, and that was the substitute for giving thumbs up. Kudos and props. But anyways, and that's because VTI is more of an index fund for the entire stock market, where on the other hand, SCHD I think of as more of a dividend income index fund. So I think SCHD held its weight pretty well. And before we run our calculations and run some assumptions, we want to look at how is VTI doing this year so far. So for the past 7.5 months, VTI is up by 16%, which I would argue is pretty awesome. All right, so how much would this experiment cost? Maybe you want a scratch-off lottery ticket, or you're tired of gambling and picking speculative companies on the stock market, so you're just thinking of going all in on VTI. 100 shares times its current price of $273, this would cost $27,300 up front. And that's like picking between a car or investing for your future. And by the way, the 2024 Honda Accord is exactly $27,800. So you could instead buy this car if you didn't want to invest the $27,000. By the way, fun fact, the upfront cost for these 100 shares of VTI would be exactly a quarter of the median household income in Washington, D.C. $109,300 divided by 4 is almost precisely $27,300. Just a fun fact. So the assumptions that we are going to plug into our forecast is that we're going to predict the stock's price is going to increase by 9% year over year, and the dividend payout is going to grow at a rate of 7%. I know earlier it said 9.7%, but we're going to be a little conservative and play it safe and reduce it by 2% and say 7% instead. And no additional money is going to be plugged into the portfolio to buy more shares. Instead, we're going to go ahead and reinvest the dividends in order to buy more shares. So that initial $27,000 is all that we're going to put in externally. So what happens after 20 years? Well, that $27,000 would have grown to $184,000. And for the first year, our dividend income would be around $368 for our 100 shares. But as we fast forward throughout the years, you can see how the dividend payout just grows. And at the beginning of 20 years, we can expect a dividend income of about $1,600. And after the 20 years, then it would be $1,700. And interestingly enough, the CAGR would be 10% year over year for the span of 20 years. And I just want to remind you that $184,000 that we see at the end, that happens through the power of dividends compounding, by dividends being reinvested to buy more shares. I mean, it's pretty amazing, right? I mean, after 10 years, that $27,000 turns into 71 grand. And then 5 more years after that, it turns into $115,000. And then at the end of 20 years, amazing. Just simply amazing. But my call out is this. When I looked at the past 20 years, right, from July 2004 to July of this year, well, that total return is 661%. And from our own little experiment of 100 shares of VTI for the next 20 years, well, that total return shows us 575%. Maybe our finding is a little too cynical, but I do want to say that past performance is not indicative of any future gains, but the data does tell a compelling story. And as you can see from this stock chart, that's why people say time in the market beats timing the market. If you had just invested into any one of these segments, like right here in 2009, and you saw your money go down by like 30-40%, of course you're going to be upset. Of course you're going to be disappointed. But as time goes on, the stock market tends to do well. If I did put in $27,000 today and the market did go on a dip to like right here, I would still feel okay, because in the long run, I know the stock market is going to repeat itself and just keep going up and up. Sometimes it could go down further and stay in a bear market for like 9 months or 12 months, but over the long run, the US stock market is pretty resilient and tends to grow in the right direction. But then, of course, that opens the door of whether or not you want a dollar cost average or do a lump sum investment. Me personally, I'm a fan of dollar cost averaging, but both methods are pretty good. I think the more important variable is whether you choose to invest or not. If you do decide to sit on the sidelines with your cash, I think in 20 years from now, you'll probably regret that decision. But who knows? knows? Maybe in 20 years, you can come back and find this channel and let me know how dumb I was for saying everything that I just said. So with that said, I'm not shy about it. I think beginners and veterans of the stock market alike would benefit from investing into VTI or VU because personally, I think they're the best index funds, ETFs available on the market. It does the job with growing your money, provides decent enough diversification. Of course, you're not going to have exposure to Africa or Asia, but honestly, do you need any when you are already investing into the biggest conglomerates of the world? And when I think about VTI and VU, they're just solid options all around. If you want to hear the full argument and why I feel this way, then please watch the videos that I made specifically for VTI, and I made one specifically for VU. It'll be in the video's description down below. So that's what 100 shares of VTI would look like. I hope you enjoyed this video, and I will talk to you next time. Amos signing out. See you guys.